According to the Bank of England, they hold 5,365 metric tons of gold. That's as per their last numbers on December 1st, which is the equivalent of 172.5 million ounces. So let's go through the story. And to me, it seems like the Bank of England is defaulting, de facto defaulting. And why is that? Well, because they've leased out a lot more gold than they have. And here's the kicker. The wait to withdraw bullion stored in the Bank of England's vault has risen from a few days to between 4 and 8 weeks, according to people familiar with the process, as the central bank struggles to keep up with demand.
Late last month, one of the world's largest refineries informed its customers that the London warehouses were empty and the London gold market was dry of liquidity. After much speculation, the Bank of England finally confirmed the news a few days later, notifying the public that the gold awaiting delivery would be delayed by 4 to 8 weeks. A little bit of background is required to understand what led to this unexpected delay. Before his election, U.S. President Donald Trump had declared his intention to impose customs tariffs on all imports, a move many investors saw as a precursor to rising precious metals prices. Following his victory, the COMEX experienced an unprecedented surge in gold delivery demands. In response, an extraordinary logistical effort was undertaken to airlift 393 tons of gold from the LBMA's London warehouses to the COMEX vaults in New York, increasing New York's gold reserves to 926 tons. This significant transfer effectively drained the available gold liquidity from the Bank of England's vaults. While this was the immediate cause of what many have described as a default, several long-term issues led to this delay. The London Bullion Market Association, LBMA, operates on a fractional reserve system for gold and other precious metals, meaning that the physical bullion backing its transactions is only a fraction of the total paper claims on it. Most LBMA gold transactions occur through unallocated accounts, where customers hold a claim to metal but do not own specific bars. Bullion banks often use these accounts for trading and lending without full physical backing. Additionally, banks and financial institutions rehypothecate, reuse gold in unallocated accounts to settle multiple transactions. This increases liquidity, but means that more claims exist than actual physical gold. If too many clients demand physical delivery at once, banks may struggle to meet obligations, leading to liquidity crises or price distortions. This is exactly what led to this default, a phenomenon precious metals analysts have warned about for years. In a recent discussion, precious metals analysts Mario Innecco and Clive Thompson critically examine the situation and what it means for the precious metals market going forward. As we present clips from their discussion, please like and share this video, subscribe to the channel, and turn on the notifications bell for more videos like this. We appreciate the support and hope you enjoy the video.
I've been working for 50 odd years. I'm retired now. And one of the things I've learned over those years is if there's a problem somewhere, you want to be first in the queue. So if there's a bank run, Northern Rock, for example, would be a good example. You want to be at the front of the queue because you might get your money. Those at the back of the queue don't get your money. Same thing with Lehman Brothers and countless other situations. When the banks were going down, clients would ring us up and wanted their gold. The first ones in line, they wanted to buy gold. We could buy the gold from the refiner and get it delivered the next day. But after a day or two and people were still asking for gold, the refiners were telling us, sorry, we're overwhelmed. You've got to wait 14 or 15 days. You can imagine the stress and panic that created because the entire banking system might go down at any point. The message is, if someone tells you or if you hear that you might not be able to get something or there's a delay, don't wait around to see if it's true. Don't listen to the excuses. Go and get your stuff, whether it be your fur coat in the example you gave, or of course in the case of the London bullion market. If they've got your gold, you want to be sure that you can get it back. So right now you've kind of missed the chance because they're saying that all the slots are taken and anyone who wants their gold can't get it. So far they say they've delivered out only 2%. Only 2% of the gold. But what does that mean? Does that mean the demand is for 20% and they've only delivered 2%? Or does it mean that 2% is nothing, don't worry, it's only 2% gone. I don't know what they mean. But the bottom line is there's no smoke without fire. And if you're in a cinema and you smell smoke, you want to start moving towards the exit before everybody else.
So did you hear about that guy, Dave Ramsden?
Oh, yes, yes. So, yeah, what did he say? Why they can't get the gold?
He
There's a
told
lorry in the way or something like that. They couldn't
that
get the
was
gold.
one of the comments. Someone left a lorry at the gate of the Bank of England, so they couldn't get the gold out.
And it's too heavy.
I don't think he said that about the lorry, but someone made a comment, just joking. But he did say, "Well, gold is really heavy, so it takes time," which is really a really bad answer. And he's supposed to be the deputy governor for financial markets. And I looked at his biography on Wikipedia. And Clive, would you be surprised that he's never worked in the financial markets itself? He's just been a bureaucrat. So I don't think he sounded very nervous when the reporter asked that question about the gold.
Well, here's a lesson for anyone who'd like to be on a board of directors. First of all, you better be jolly good chums with the people who are on the board already. And secondly, it doesn't matter about qualifications. What the people on the board of directors actually want to hear from you is that whatever happens, you will support them. So people put in place on the boards of directors of big companies and also institutions like the Bank of England probably and so on, they put in place, and I'm not saying these two are friends because I don't actually know the situation, but I'm speculating here, they put in place people based on their loyalty to each other more than their technical qualifications. So this guy, Sir Dave Ramsden, obviously he's knighted, so he's a very important person. He's second in line to Andrew Bailey, the governor of the Bank of England. He's the deputy governor. So a very important person. And, I think it's disappointing that he didn't come well enough prepared to answer the questions as to why the Bank of England is not really able to deliver the gold which is being demanded.
A clip of Dave Ramsden trying and failing to logically explain the reason for the delay in delivery has gone viral on social media. Ramsden, Bank of England's Deputy Governor for Markets and Banking, appeared alongside Andrew Bailey, the central bank's governor, and others for a press conference following the BOE's interest rate decision last week. When asked about the situation at the LBMA, this is what Ramsden had to say.
I wanted to ask about gold, given it can act as an inflation hedge and the current liquidity stress, in what you said yourself last week is one of the world's major markets. So how much gold has now left the BOV vaults in anticipation of tariffs? And with bullion banks looking to borrow from central banks that hold their gold at the BOV, what is the central bank doing to help alleviate current queues?
Dave, do you want to?
Yeah, I think I picked up the question. And look, it's worth, given that this is the NPR press conference, it's worth putting what's been happening to gold, which is the detail of your question, in the context of what's going on in the world economy and the uncertainties out there. It's also worth bearing in mind that because this helps explain some of the facts around the time it's going to take to get gold out of the bank's vaults because of the nature of our approach to the gold. So, I mean, the first thing to say, we have the second largest stock of gold in the world, over 400,000 bars of gold at the moment. That's gone down a bit since the end of 2024, reflecting the market conditions that you're talking about and have been a feature in the news. But the stock has gone down by about 2% since the end of, so that's important to keep that in perspective. And, the US gold market has been trading at a premium to the London market. And commercial gold holders have been looking to take advantage of that price differential. So they've been, there's been strong demand for delivery slots. We can meet that demand. All of our main counterparties, as it were, or better to say, all of those bodies who ship the gold have, they've all got the delivery slots they need over the next few weeks. If you were coming in new to us. You might have to wait a bit longer because all the existing slots are booked up. But this is a very orderly process. It is worth stressing compared to some of the markets we usually talk about. I mean, it's an obvious point, but gold is a physical asset, so there are real logistical constraints and security constraints. Getting into the bank for me this morning was a bit trickier because there was a lorry in the bullion yard. But that's just the reality of it. It takes time, and the stuff is also quite heavy, as you know. So, I think these things sometimes get forgotten about in a headline that says, there's a 6-week delay or something like that. There's a lot of demand, but we've got slots for all the people who currently want to get their gold or want to ship gold on behalf of a customer, and we're managing it.
A most unsatisfactory answer, as many experts have pointed out on social media. In reaction to the excuses about logistical delays, precious metals analyst Ronan Manley wrote, "The Bank of England had no problem moving thousands of tons of gold from London to Southampton by rail in June and July 1940 as part of Operation Fish, where the gold was then shipped to Canada, or in loading thousands of tons of gold in November 1967 and March 1968 that was flown over from America and convoyed down to Threadneedle Street. Even a Muppet can see that these excuses by the Bank of England about logistical delays are pure nonsense." Like Manley, Clive and Thompson believe something bigger is happening and suggest that this could be the beginning of a massive squeeze that will ripple through the entire precious metals market. Let's get back to the video.
I suspect, and I don't know this, but I suspect a lot of that gold will have been leased. The bullion banks will have leased it out.
Yeah.
And if you want to deliver it back to the original owner, you've got to get it back from the people who borrowed it. Now, the question is it that they won't return the gold, or is it that they can't return the gold? Or is it there all along and they've just got logistical problems? They can't find enough Brinks Mat vans to deliver it. I don't know. What he's saying probably is quite true. They're not geared up for lots of deliveries. People don't normally ask for their gold back, but suddenly everybody is asking for their gold back and they're not geared up for it. That's probably true, but just in case it's not, I would want to be at the front of the queue.
That's right. And that means, of course, that you want to get physical gold if you're thinking about it now while you still can, because the retail market is, how can I say, still functioning quite well. It probably will feel the tightness that the wholesale market feels, Clive. And that's why.
Then we've got the hedge funds out there, Mario, and I think the hounds can smell blood.
Clive, so do you think I guess this is the question now, whether there is a bit of squeeze, we have to admit, but will it be the mother of all short squeezes, or is it going to be able to be orderly? What's your feeling?
Well, if I had been sitting there, I would have immediately calmed the market by saying, your gold is safe with us. How would you react to that, Mario?
I would probably think it's not.
You'd probably think, why is he saying it? Yes.
Yeah.
So no, whether there's a real problem or not, in terms of the bullion, they're getting be able to get their hands on the bullion to deliver it, or whether it's a logistical problem. I'll go with the logistical problem, but I don't have any gold at the Bank of England, and if I did, I'd be trying to get it now just to be fair. Like in the cinema, you smell a bit of smoke. It might just be someone with a sly cigarette under the seat, but you're not sure. You want to be edging towards the exit.
Eric Jung, an analyst who studies the effects of geopolitical and economic issues on precious metals and commodities, provides a more in-depth look at what's happening in a post. "I just want to clarify one thing," he wrote. "I believe that international players like China proxies and Indian proxies were also standing for physical gold deliveries and withdrawing at the COMEX and LBMA. They might be doing it now as well, but the 15x physical delivery volume increase at the COMEX and the withdrawal volume that pushed the LBMA to T+60 physical gold deliveries is most likely due to a new big gold buyer that showed up. That new big gold buyer is most likely the Fed, the US government, or their proxies because the COMEX and LBMA would have forced them to cash settle or negotiated a cash settlement if it is anyone else. When asked why he thought the US government was preparing for, Young replied with, "A physical gold audit." This is why it began a month before Trump's inauguration. Bessent told Yellen and Powell that they would be doing an audit of the US government gold. A lot of these things are still conjectures at this point. However, it's clear that whatever is happening supports higher gold prices. Gold prices surged sharply on Monday, with buyers driving the commodity to several new all-time highs above $2,900. This bullish movement follows recent comments by US President Donald Trump, who announced that he plans to impose reciprocal tariffs on a range of countries later this week, either Tuesday or Wednesday, an action that is contributing to increased uncertainty in global financial markets. Additionally, on Sunday, President Trump stated that a 25% levy would be applied to all steel and aluminum imports into the U.S., although no effective date was provided. These developments underscore the growing geopolitical risks and economic volatility that are currently influencing investor sentiment towards safe haven assets like gold. When do you think gold prices will hit $3,000 per ounce if the situation persists? How do you think this surge will impact silver prices? Please share your thoughts, comments, and observations in the comments section below. If you liked this video and want more content like this, please don't hesitate to give it a thumbs up, subscribe to the channel, and turn on the notifications bell so you never miss our future videos. Thanks for watching, and we hope to see you in the next one.